Thank you very much.
When managing a portfolio, do you pay much attention to the activities of Congress and the regulators?
Did Ed Markey put this one up? I'm not sure. I spend zero time thinking about what's happening down here in Washington, and I spend little time thinking what's going on in Russia or China. I just deal with facts. When the economy's going down, when the economy's going the wrong way, I can deal with that. This whole health care reform bill drove a lot of drug stocks down to low levels, and I could say to myself, well, 60% of Johnson & Johnson's earnings are outside the United States. Their pharmaceutical drug business is all on patent. Nothing's coming off patent. They only have 5% of sales from one product, which is Tylenol, which is already an over-the-counter drug and is growing overseas. I says, why is this stock gone from 58 to 36? And these companies are already dealing in Japan and overseas with they already have the government controlling pharmaceutical prices. They've dealt with it. So I deal with facts. They might, this year, I thought it was very likely you'd have a bill passed on health care. It didn't happen. They drove the stocks down, but I think the stocks would have rebounded anyway, even if the health care bill was passed. So I don't deal with what's happening in Congress or what's going to happen in the future. I just deal with what's happening in the economy and what's happening in the companies I call.
Thank you. How useful is the financial reporting in the general daily press to you, and how useful should it be to investors in general?
Okay. It has improved dramatically, not just in the press, but also company reporting. 10 years ago, companies didn't have interim balance sheets. It's hard to imagine. They only gave their balance sheet to you once a year. Now they show you quarterly what's happening in their inventories, what's happening in receivables. In the major newspapers, they'll even show types of funds. They're now, I think there's 2,500 companies in the New York Stock Exchange. There's over 5,000 different mutual funds. So there's twice as many mutual funds as there are stocks. At least in the paper day, explains what kind of fund this fund is. So I think reporting has improved. They report earnings. But again, I think if you own auto stocks, you shouldn't be reading the financial part of the newspaper. On Wednesday, the local newspaper, Tuesday some places, or on Saturday, they have a whole 4 pages on automobiles. And they talk about new models. And they say this one stinks and this one's outstanding. They really, if you own auto stocks, that's the part of the newspaper you should be in. You shouldn't be calling your broker 4 times a day to get stock quotes. It doesn't work. Getting up in the morning to look to see how your stock did yesterday is not useful. All this stuff is just a waste of time. If you're adding up how much your stocks are worth, absolute waste of time. You should be looking at the company when you get the quarterly reports. You should be, if you're at the mall, imagine if you were in the retailing industry, or if you're in the restaurant industry, you would have seen Taco Bell, you would have seen McDonald's, you would have seen Toys R Us. I mean, you would have seen all these companies do terrifically well. You would have seen Bombay, you would have seen Tandy with Radio Shack, and you would have seen Radio Shack roll across the country, and pretty soon there were 25 Radio Shacks in every major city, and you said, there's not much room for them to go. But they had a 20-year great run. That's what you're dealing with. You're not dealing with the minutia of today. You're dealing with what's this company doing 2 years, 3 years, 4 years, 5 years from now. And if you're dealing with a cyclical and business is turning around, you wait for signs that business is slowing down. And when you see it, you move on to something else.
Are you concerned about the volatility in the financial markets today? Do you think something needs to be done to reduce it?
I love volatility. I remember when in 1972 the market went from down dramatically, and Taco Bell went from 14 to 1. They had no debt. They never had a restaurant close. And I started buying at 7, but I kept on to it, and it went to 1. And it was the largest position in Magellan in 1978 when it was bought out by $42 by Pepsi-Cola. And I think it would have gone to 400 if they didn't buy it out. I think volatility is terrific. I think these callers are very important. I don't think the market going up 80 points one day and down 80 the next is a good thing for the public. I think that's not a very good thing. But I think all of these callers and all these other things, to keep the volatility down each day is important. But the market's going to go up and down. Human nature hasn't changed a lot in 25,000 years. And some event will come out of left field, and the market will go down or the market will go up. So volatility will occur, and markets will continue to have these ups and downs. I think that's a great opportunity if people can understand what they own. If they don't understand what they own, they can own mutual funds, try and figure out mutual funds they own, and keep adding to it. Basic corporate profits have grown about 8% a year historically. So corporate profits double about every 9 years. The stock market ought to double about every 9 years. So I think the next market's about 3,800 today, 3,700. I'm pretty convinced the next 3,800 points will be up. It won't be down. The next 500 points, the next 600 points, I don't know which way they're going. So the market ought to double in the next 8 or 9 years. It ought to double again in the 8 or 9 years after that. Because profits will go up 8% a year, and stocks will fall. That's all there is to it.